member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure is the same. A round trip to Pinterest at one point today. That was it. And let's talk about this day. These are the types of days that actually really frustrate me, even though I closed with some decent P&L, mainly resulting from long swings. The intraday action on these types of days can be very tricky and very difficult. So let's talk about it. SPYs here, the S&P, including a little dip after hours off atrocious Intel earnings, are still up a percentage point. Qs are up 1.75%, so relative strength from the Qs again, still continuing that mean reversion. That mean reversion might be just about over at this point. IWM was up about 0.5 percentage point. Take a quick look at earnings, I guess. Let's see. Intel. These Intel earnings, stock's down 4.5%. I know that this is not a name that tends to move, 30% on earnings, just because of the type of company it is, and it's already kind of like a value name. We have seen some pretty big dips on some earnings reports in the past. We're down 4.5% right now. That earnings report looks awful, like really bad. EPS 10 cents, estimate 19 cents. Client computing revenue is a miss. Just fourth quarter adjusted revenue is off by 0.4 billion. So that's a miss. And then the guidance. Oh man, Intel sees Q1 adjusted revenue at 10.5 to 11.5 billion when the estimate's basically 14 billion. And then this EPS, I had to look at this EPS twice to make sure that I was actually reading it right. They're expecting a loss of 15 cents per share when expectation is for positive 25 cents a share. I mean, is there something in the fine print that I'm missing on that? Is there like a one-time fine or something that they got to pay? How could that be off that bad? How could that guidance be off that bad and the stock's only down 5% right now? It was like, when Bill put that in there at first and then Pat confirmed it basically because he said the same thing. I'm like, am I missing like a negative sign or a positive sign somewhere? Like, could it really be that they're expecting negative 15 cents versus positive 25 cents? But I guess that's what it is. Only down 4.6%, 4.5% right now, which is actually kind of impressive. That's a really bad looking report. We got Clack down here, 2.4%. Yeah, it looks not like nothing great. Looks like nothing too special. Guidance is on the low end, I guess, of expectations with the range that they're giving for EPS. Same thing with revenue. It's kind of the low end of expectations. And then Visa, we got Visa up after hours. Visa trading higher after hours. EPS beats, rev beats, payment volume comes in a little bit light. We'll see where these things settle. All right, let's jump into today's action. Yeah, so today's one of the days that frustrate me because it's like at the end of the day, it's like, oh, I was right. Like if I just was on vacation today, I'll be on vacation in a couple weeks. If I was on vacation today, I'd look at the market and be like, oh, I was right. We had a breakaway gap and we closed at 405. This type of gap, this type of action, we broke out today. We should move higher, and we closed higher. I must be a genius. And then when it actually comes down to the trading on this is just very hard. I actually think that the best thing that we were able to do as a team, as far as our team communication today, was not really produce anything that made real money, but we were very consistent with our commentary on patience, and when we finally did get some trade setups, kind of given where they were, the communication was, let's take these as lower risk trades, let's be defensive in our game plans. So that was really the key to today. And again, the reason why it's frustrating is because we closed at 405. But when you look at this intraday price action and we analyze how difficult it was, and we can do that right now, it really was more of a capital preservation type of day. And you don't want today to be like a capital preservation day. You want today to be, especially when you close at 405, we had a breakout on the daily chart of the market. You want today to be one of those days where you're feeling really good about yourself when the day ends. You want today to be a day that you're pumped to go out to a nice dinner or something like that after completely crushing the market. And it just was not that type of day at all. Let's do a little gap review on a breakaway gap and what that means and what the implications are of a breakaway gap, because it's probably the second most common type of gap. The most common type of gap is what I call a common gap. It's also sometimes referred to as an area gap. Common gap is that typical gap that you see almost every day that occurs within the confines of previous price congestion, and they tend to get filled. Breakaway gaps are much less often than common gaps, but they actually tend to not get filled. This morning was a potential breakaway gap, and it did get filled. And they actually held the gap fill with the SPYs at least. I know they overshot it with the IWM. The IWM was weak, and that was our signal that it was our big signal to be cautious today. They filled the gap and then rallied this market back up with the SPYs. But why? Why is it that a breakaway gap is the type of gap that tends to not get filled and lead to a gap and go? And then, of course, it didn't happen today. But whenever we talk about anything related to technical analysis, it's really important that we have an understanding of the supply and demand implications that make up what we're looking at. And then you remember that everything that we're talking about, it's always about probability, and there's no such thing as 100%. So why do breakaway gaps tend to lead to a gap and go? Because the nature of it is that a breakout is occurring via a gap. So think about it like this, and maybe this is the reason why it didn't actually turn out that way, is because we had too much time closing around 400 that gave shorts the opportunity to kind of get out, or longs are already involved in the market. But when you have a breakout that happens via a gap, what that means is you got this resistance level and we're opening up above it. So if you had been short the market versus the resistance level, if you were short the market versus like SPY 400 or giving a little bit of space above, and the market gaps above 400, it gaps above where your stop was supposed to be, and you're short, you're in a really bad spot. You are losing more money than you game planned on losing. And what do most people do in that situation is they got to panic out of the position. So that's buying, right? So we have a market that's gapping up, and buyers are immediately coming in on the short, who are short, because they're getting squeezed. The market's gapping past their stop. What if you want to be long, but you haven't been? You've been very patient because you're like, wow, SPY 400, it's resistance. This market's in this big downtrend. I don't want to buy too early. I don't want to be the guy or girl who bought this pivot high right here, or bought this pivot high right here, or bought these pivot highs right here before these big sell-offs, or bought this pivot high right here, right in the trend line, on any of these previous few days, right into this downtrend line. I don't want to be that person. I don't want to buy this high and have it come down. I want to wait for confirmation. I want to wait to show me that the market can get above 400. I want to wait to see that the market can get above this downtrend line. And then this morning, when we gap up above, they go, okay, go time. I'm a momentum trader. The market is giving me the okay signal, and I'm ready to come in and buy. You also will have some longs that are out there who are profit takers. They see a gap up this morning, and I'm in that category this morning. I was selling into the gap up this morning. So I'm like, oh, great, I got a gap up. I got longs on. Let me sell some. So you do have some selling from profit takers, but what tends to happen in a breakaway gap is those shorts getting squeezed and those new longs chasing in overwhelm anybody who's a profit taker, and it leads to a gap and go to the upside. And whenever I'm looking at a potential breakaway gap like in the SPYs, I always want to make sure that it's also being confirmed in the IWM and the Qs. And we had that today also. SPYs are gapping above 400. They're even gapping above this pivot for anyone that wanted to use this pivot as like their exact real high of the resistance or that trend. Qs are gapping above this 390 that's established as some resistance. IWM is gapping up above this really important 188 that's acted as big resistance back in November and December. And on top of it all, we're not extended this time. You know, the last time we attempted to break out above $400 in the market on January 23rd, what was I doing that day at highs? Personally, I was short selling. And you guys know that I'm like a very patient short seller. I really don't rush to do it. I tend to prefer to miss shorting opportunities than be too early in them. I was shorting the last time we were getting above 400 because of the extension that we had in the Qs. But we didn't even have that extension anymore. We had 2 days of rest. We had an incredible comeback from the bulls yesterday. You had this ADMA catch-up. So we're opening up a little bit extended, but not so extended that we can't continue when you're having a breakaway gap like we're potentially having. I want shorts to come in and get squeezed. I want new longs to say, hey, this is my opportunity. I got to enter the market. And where you're going to see that happen is going to be earlier in the day, traditionally, in a breakaway gap. I was actually worried because I then have rules about small time frame extension that in this big of a gap caused me to take a pause and be more cautious and more patient. I was actually worried that I wouldn't buy in the beginning of the day and I would look to be cautious because the gap was so big. And we would have just a monstrous green candle or several green candles in a row where the first half hour we're just squeezing and ripping higher and we're getting all the way to like 407 or 408 in the market. And that I wasn't going to be aggressive enough on the long side because we were gapping so big and I was going to be patient. That was actually my biggest worry on the day, given what the daily chart was showing us. And you know, that patience and cautiousness that I have is for a reason, and we could discuss that as well. And it ended up, you know, saving me today that I wasn't, you know, just pressing my buy button. And if anything, I was actually booking profit initially because the gap was so big on swings that I already have. But that's why I always want to be cautious in these gaps. You know, if the market just went off the open, which it could have, that's a momentum move. And I can do momentum trades. I'm not a pure momentum trader anymore. I'm not a pure scalper anymore, like I was, you know, very early on in my career. I want to have more of that equilibrium, confirmation, technical setup, the stuff that I always talk about that I feel leads to bigger and sustained moves. So when I see this gap up this morning, I remember doing the morning meeting today, and I was like, wow, like I feel like I should be excited, but I'm actually also a little bit nervous because we do kind of see these moves fail a lot. But this is it. You know, yesterday was the opportunity for bears to really prove themselves. They failed. Bulls bought the dip. Today is the opportunity for bulls to really prove themselves and rip this market higher. And the reason why it's frustrating is because we ended up closing at like 405 in the market, but this intraday price action was so hard. So what do I want to see early in the day? I want to see how the market handles the upside extension. And there are a few different scenarios where this can kind of play out. And let's try to come up with those scenarios because we do see this same thing, whether it's with a potential breakaway gap or not, but we see the same thing with gaps play out over and over and over again as far as different possibilities that can happen. And then which possibility will occur, that probability adjusts based on the type of gap that we're having. So we could have a gap that looks just like this and it's a common gap. We could have a gap that looks just like this and it's a potential breakaway gap. And there's going to be little different probabilities of what that market can do of the different situations. So again, one situation, especially this, has a even higher probability of occurring with a breakaway gap, but has a lower probability of occurring with a common gap, is what I was afraid of. You get this gap up, the market's extended, but the whole thing about the concept of momentum, what's the definition of momentum? Momentum means the greater the price, the greater the demand. The whole thing with momentum is that you can have a market that's extended and become even more extended. So one situation is exactly what I just described. We gap up really big. I'm being patient. I end up missing some of the move because the market just totally rips higher. Momentum comes in. The market was extended from the gap. It just becomes even more extended. That's one situation that could happen. Another situation that can happen, and this is my most bullish situation, this is the one that I like the most, is that we go sideways. We go sideways and we time correct the gap up. This big of a gap, it might take 30 minutes, it might even take 40 minutes for the ADMA to catch up to price. But what is that? That's a bull flag. That's a bull flag with the gap as the flag pole, and then you have the time correction for maybe a half hour. ADMA catches up to the base of the flag. You had some, and what's causing that? You have some profit takers, like me, selling a little bit off the open because I got a gap up, I got swings on, got some extension, but you've also got some shorts that are getting squeezed. They balance each other out for a half hour, but as the ADMA catches up, it brings in new buying, like me. Maybe I was selling earlier, now I'm flipping to a buyer because that ADMA catches up, and then I can get a beautiful uptrend, gap and go continuation day. That's a setup I love. That would have been my ideal situation for today when the market's potentially giving me a breakaway gap. That's what happens. We don't get the gap fill, we get the continuation. Scenario number 3 is we combine a price and time correction. And for a minute there today, it looked like that might be what was going to happen. We start by kind of going sideways, but then because of the extension, you pull in a bit, but not with like downside momentum, not with like 3 heavy red bars like we had here, or 3 heavy red bars off the open, which is going to be the next scenario. You kind of go sideways. You get 1.5 bars of a pullback. It creates a tail on the second bar of the pullback, which might be the 4th bar of the day. It tails, maybe it tails to the ADMA, maybe not quite to the ADMA, but you pivot up. You get that like continuation hammer, almost the opposite of this from yesterday, right? We had like 2 bars of rest, we had a bounce, the shooting star comes in. For me, this one was a little bit extended. Remember, Josh was on point with the short early. I was a little nervous that it was a little bit too early because there was still a little bit too much extension there, but basically something like that in reverse. So you time correct for a little bit, you price correct, you get the pivot, the ADMA catches it, or the bottom of the tail like tickles the ADMA, and then you have a real clear pivot. You go long off that pivot, you understand that you have this potential breakaway gap situation, and then bam, you go. So that is going to be our scenario number 3. Scenario number 4 is a lot of what we saw in November and December on gap ups, where buyers want nothing to do with that. Sellers and short sellers are like, thank you, I'll take that, I'm selling into this. And the buyers are totally on strike. No one has any incentive to come in and buy this market, and you just get that like heavy selling off the open. When you get that very heavy selling off the open, if you have a gap this big and they fill that gap in like 15 minutes or 20 minutes, the probability of a new high coming in on the day then becomes very low. So that's a situation then where if I see that, where I'm like, okay, I'm going hands off for the day, or possibly looking for short setups if this market goes beyond filling the gap and is, potentially giving us a downtrend type of day, or a failed breakout or something like that. Well, today wasn't a failed breakout at the end of the day, but it also wasn't any of those bullish situations that I talked about. This was like some sloppy in the middle combination of it all, which from a trading execution perspective, it's just very difficult, and it almost leaves me scratching my head a little bit. We got 10, 12 minutes of time correction. Okay, not bad. This bar comes in. I'm like, okay, not the end of the world. A little bit of a price correction. I remember this candle right here, the 945 candle. I think that this candle was the 945 into this 950 candle were real keys, and it was especially when you were looking at what the IWM was doing. Right, the SPY still had a chance, and the Q still had a chance. The IWM was like, oh, there's a problem. And once again, team, what have we all seen over the course of the last year plus, very, very consistently, is the IWM is our leader, right? And it's not necessarily the end of the world for the IWM to sell a little bit harder off the open if it also bounces the hardest on the bounce. And if you guys remember when I was on the radio, I was like talking about that. I was like, all right, I need this IWM to bounce. And even here, when it attempted to bounce, it was just like not good. So I remember this 9:45 bar of the day started with a rest bar. It started with like an inside candle. I thought that this was going to be an inside candle as it was forming. And I was like, okay, 10 minutes of sideways price action, little bit of 10 minutes of time correction, 5 minutes of price correction. I'm getting another 5 minutes where this is going to be an inside candle. I thought if we got an inside candle here, and that's really what I was expecting, because I feel like it was an inside bar for like the first 3 or 4 minutes of the 5-minute candle, and then it broke down viciously. I was like, oh, that's going to be a very important inside 5. Because if the IWM can pivot up and we get the inside 5 here and up, the ADMA hasn't quite caught yet, but I can still get my bullish breakaway gap situation, and we just needed to correct the extension from the gap. That's normal. But we didn't have the inside candle. We broke down in the second half of the forming of this bar. We closed on lows. Next thing here was basically the same. And it's like, even here, this is becoming a deeper price correction that I would want. It's still not necessarily the end of the world. It's just into the equilibrium zone. But when you look at the IWM was the real signal. And that's what I was saying at a certain point. I was like, I just can't. Even if the spies and Qs begin to show me a pivot, which is then what happened at 9:55, if I don't have that IWM confirmation, I can't do much with it, and I can't be super aggressive off of it. And I remember, this thing just looking so bad. IWM goes negative. Spies are pulling in deeper than they should. Qs are still okay, but, what's most important to me is always going to be this IWM as a consistent leader for this market. When we finally did get the pivot, I remember the market pivoting, and at first the IWM wanting to do nothing with it. It might even have been on the previous bar, where I remember watching the spies intra-bar try to give like a big tail up, and Qs try to give a big tail up, and the IWM was still ticking lows. And I was like, this pivot's not going to be a real pivot. It's not going to be able to hold. It's not going to be able to work. And then finally, on overshooting the gap fill with these moving averages rolling over, we begin to maybe have a signal more with the spies and the Qs of a potential pivot, but still nothing with the IWM. And that was like really the first long call out. And it was a long call out specific for stocks that were showing relative strength, and specifically to be done with not a lot of risk and not an aggressive game plan. Why? Because of everything I just described. The market pulled back more than it should have. It's led by the IWM, and the IWM is giving us no signal for it. So we had a couple call outs at that time. I think it was at that time, like we had like this Tesla at 10 o'clock. We had Apple. That was a little bit after at this 10:10 that Rex called out. We had this Amazon pivot here that I was looking for to hold. All around 10 a.m. with the market trying to pivot back up. And they were okay trades. I think that most of them, and I forgot about the shorts off the open. Totally forgot to talk about those. I can circle back to that. They were trades to be taken because there was relative strength there. There was a pivot. The spies and Qs were pivoting. The IWM was not confirming. They shouldn't have been big risk trades. And they tended to just about all work enough to at least get your risk covered before they failed. Amazon broke this low, it failed. Oh, Google was another one. Google on this higher volume. I liked this volume pickup here. I thought Google was showing relative strength. That one eventually failed. Apple here gave a great balance, more than enough to cover your risk. That eventually failed. We're looking at Nvidia here. That tried to go, broke the lows, eventually failed. Tesla was one of the ones that tried to hold out longer. Actually, it did hold all day, right? Did this Tesla hold all day? It did hold all day. Yeah, so Tesla actually ended up being a really good one. And Tesla was on earnings, and not to get off topic, but I love that trade on the earnings play. We talked about it coming into this earnings season, that pivot low off the ADMA on a big gap up on earnings on the first test. LVS did the same thing today. And I wasn't watching Vegas. I saw the Tesla in real time and called it out. I wasn't watching Vegas till it was already gone. But price corrects in equilibrium, gives you this doji. Go long off the low of that doji. Very often that leads to a pretty productive trade. Happened with Vegas today. Happened with Tesla today. It's a very common pattern. It's a trade that I really like, and everybody should add it into their textbook of trade setups that they might have for themselves. So, we get the attempted bounce here. It really just turns into a lower high. And, for me, it was like, all right, there's a trade here. I'm going to put some longs on. I was buying some stuff off of it. I wasn't looking to add anywhere on the way up. I just couldn't trust it because the IWM just really wasn't confirming. It broke down too hard. And then for me, when things broke lows again, I was done. I was done. This, as difficult as this would have been, like if this was the low of the day and then we, closed at 405, there still would have been like the trade that was there, right? The pullback, deeper than we want, okay, SPYs and Qs, but we're in a low liquidity environment, a lot of volatility. The IWM was concerning, but look, the IWM turns around, it recaptures. I remember looking at 187.50 on the way up. It recaptures it. This thing works its way up. It's a little bit relatively weak, but the market puts it in slow that day. We caught these pivots. Some of the trades shake out. Some of them work, but we end up having a fruitful day because we end up closing well and closing at 405, and that was the low. But no, that's still not what happened. We even had to break this low and go negative in the SPYs briefly, fully fill that gap, though we did hold SPY 400 as support. Same thing with the Qs. Qs never went red. But they overshot that 390. This also makes sense that they tried to pivot here too because 390 is the spot we talked about on the daily level, and that broke that low as well. So for me at this time of the day, I was already being less aggressive, but when this low breaks, it's like I'm washing my hands of this market. It's just not doing the right things. I'm not getting my breakaway gap. There's no way we should be breaking new lows of the day at 1050 with the IWM going nicely negative. The Russell is well below 188 that I needed to hold. I wanted, find the SPYs above 400. We know that's the key real level, but I really wanted us to hold that high from a couple of days ago, honestly, like this 402.62 or at least like 402. We can't do that. I'm going to wash my hands of this market. And then, just as I'm washing my hands of the market, the buying algorithm comes in that creates this grind that just goes for the entire day. And then I was, even though I was literally making more money because I was long, and I was so frustrated by the last 10 minutes of this IWM move. Like, I'm making more money, and I'm like, are you kidding me? You're below 188 all day, and now in the last 10 minutes of the day, you're going to give me this rally to go above 188? Like that's how you want to play this today? But, you can't always control what the market's going to do. And it's kind of what ended up happening. So that's why I would describe today, today's still a very productive day for the market. In the YouTube channel, I think I called it Breakout with a question mark as the name of the video today. Because, we did break out. We are on a closing basis somewhere, and maybe Intel destroys this, though Intel's usually not that important for the market, but I see it's really bad in bringing down AMD in the video also. But, if you're a bull, this close today at least is exactly what you want. We held support, we closed at highs, we have technically officially had another breakout today. We closed above resistance. I would argue that we're breaking this downtrend line. We're above it. We closed above it. We didn't just tick, we ticked above it here, but we got destroyed. We're closing above it here. So yeah, I mean that's kind of the end of the day and how it played out. But at the end, it was also a really frustrating day. So that's why if we were smart enough to be in capital preservation mode today and the market closed like crap, I would feel really good, honestly. Sometimes just not losing money on difficult days is sometimes it's even better than making money. Well, it makes you feel even better than making money. Or I know we all know the feeling of when you've been down a lot and close flat. That's that feeling is sometimes better than when you actually had a really good day. Oh man, I was in a really tight spot today and I managed to kind of close flat or green by a little bit. Today's the opposite. I'm up money at the end of the day today, mainly because I've got some long swing positions on. But the intraday price action this morning, we had such a great opportunity to give us a phenomenal trade to get the same close, and it was just really difficult intraday price action. The thing I didn't mention is the shorts from this morning, and awesome job. They were communicated. Congratulations to the people who took them. I know that they were more scalp type of trades, but we called out Netflix as a short in the morning meeting. That was really Pat's idea for like an RDR or DOO, whatever you guys want to call it, on the other side. And I was nervous about the shorts off the open. I was nervous about the shorts off the open because of the situation I described where momentum comes in off the open and we just go. Because I look at this Netflix daily chart and I'm like, this is a little silly. Like, I feel like Netflix can't go. I feel like Netflix today is going to be an underperformer even if the market gives continuation. At the end of the day, that's correct, right? The market had a nice positive day and Netflix is down 0.9% on the day. Even though it's been the strongest daily chart that's out there, it's a day 5. You know, you got the stock trading at 370 and the ADMA at 350. You got a lot of extension on a day 5. So if the market was going to give any type of price correction off the open this morning, I really liked the idea of this Netflix short back through yesterday's high. And some of you guys took it, and it was a little bit tricky because I know there was that secondary bounce, but it was good. NVIDIA back through 200 was another one. I couldn't believe off the open that NVIDIA was breaking 200. I couldn't believe that it was breaking that $200 off the open. This is another one that was a little bit tricky because it broke it, came back down, broke it again, gave the real shooting star, and then really came back down hard. So maybe some people actually got shaken out at highs and then it went, and that's fine. But like I remember being shocked off the open that NVIDIA was breaking 200 and was like, this could be a short back down through 200. And it's for the same reason as Netflix. It's a day 5. You got the stock trading at $200 with the ADMA at 185. There's just too much extension there. That's going to be so hard for it to go, even if the market's continuing. And then the other one was actually this Tesla. We talked about Tesla 160 in the morning meeting. And Tesla off the open broke that 160, came down. I think this was the first short I called out, that you could short Tesla through 160 versus highs. So some of you guys took that. I don't think that's an easy trade either, but because the market price corrected as hard as it did, they were all, you know, pretty good pullback type of trades for, you know, smaller time in a market that behaved continuation. So I still think that even though we closed on highs, that the best thing that we really did as a team was not those shorts off the open, even though they could have made you a few bucks, was actually recognizing, hey, we had a morning game plan this morning where we talked that we maybe can get aggressive to the long side, and the intraday price action is just not confirming it, and we need to be patient. And then when it finally, like a setup did come, it just wasn't giving us the right formula, and it was okay, you know, you could take it, but you want to take it with lighter risk and a less aggressive game plan. So I think you should give yourself a pat on the back today if you preserved capital well today, if you had risk management well. Risk management well, did I say that right? If you did your risk management properly, your money management properly, if your tier sizing and individual risk on your trades was done correctly, I think you can give yourself a pat on the back because that it's a very difficult day when you want to come in and you want to be aggressive because there's a potential massive breakaway gap after what happened on the market, and you have to pull back on the reins and say, I can't do it here because the signal's not there. So that's all I got for you guys. Happy to take a look at any questions that you guys have. I'll scroll up here into the VTF and see if I see anything. Hasbro reported. Smoked. Off 8%. Not good. EPS is a big miss on. Yeah, big miss there. Is AMD and NVIDIA still trading lower? Yeah. AMD is down solidly. NVIDIA is still technically green on the day, but having a pretty big pullback now. How much is Intel's down 7%? It still doesn't even feel like enough. From Dave S. Hope you can take a look at my MetaTrade for sure. I bought in at the 1140 candle. Okay. Nice little intraday breakout happening in a relatively strong name. Just take a look what the Qs are doing then. Yeah, Meta is so relatively strong. Qs are not really supportive of the trade, but you gotta love this relative strength in Meta. So I bought it at the 1140 candle and I saw it get above the 1030 high. Yes, you got some intraday resistance here. So you got this 1030 high. Okay. The following candle traded very weirdly with a wick down and I wasn't able to cover. That's this one right here, I'm assuming. That's 1145 candle. And that's fine. You know, just quick touch into the ADMA, continuation of that relative strength, and inside 5 and up even after that. That's just the formation of the candle. I haven't finished reading your question, but you want to make sure you want to try to not overread that type of candle there in the moment. Like in the moment, this was at lows and touching that ADMA and snap right back up. And you don't want to overread the intraday price action as it's ongoing in that situation when you're already in the trade. Let me continue to read it. I wasn't able to cover the risk for a while. The trade worked out because I didn't get stopped out, but I ended up covering risk early due to getting so close to the stop loss and therefore getting nervous about the trade between 11:45 and 12. I feel like even though it was a winner, I traded it bad due to getting less than an ideal entry and covering risk as soon as the trade started to work again, which led me to making less than I was risking. And I got stopped out of my trailing at the 12:15 wick down. Let me just see what that looks like. It's too tight of a trail. It's way too tight of a trail. You know, like I said, you know, buy the ticket, take the ride, right? You're already in the trade. The biggest thing that I would say about this trade is that it should just be a trade that wasn't done with a lot of risk. Similar to what I was saying earlier when I was kind of describing some of the trades that we took off of this low and the reason why. You can take those trades there, but they shouldn't be heavy. Like if you're implementing a risk skew system, which is what I really advocate towards more advanced, more experienced traders who are trying to make real money. If you're at the entry level, maybe you don't want to do risk skew yet because you're trying to get your processes down. If you're more experienced, you want to have a risk skew system. Trades like the trades I was talking about at 10 o'clock, it should be lower down on your risk skew system, and the exact same thing with this meta trade. Because there's some things to like about it, but there's also plenty of things to not like about it. What is there to like about it? The relative strength, the intraday breakout. What is there to not like about it? The market is not participating at all. The market looks shot at that time of the day. Also, the time of day. It's kind of a garbage time of the day to be implementing new trades at noon. So you got a couple things for it, you got a couple things against it. Therefore, it should be lower down on your risk skew system. But also because it's lower down in your risk skew system, is even more reason to just trade the trade. You know, the only reason why you should be nervous and changing your game plan in the moment, well, there should be no reason why you should ever do that. Let me start by saying that. But if you're too heavy on a trade that just doesn't have enough things on your side, that's when it's easier to get in your head of, oh man, I shouldn't be in this trade, it's a bad time of day. You know, you start focusing on the bad things. The market's not participating, it's a bad time of day. Or you could be saying, there's some things for it, there's some things against it. I want to be involved in this trade, I'm just not going to go with maximum risk. I'm going to use lighter risk, and because I have lighter risk, you know, I'm totally comfortable getting stopped out of it. You should always, by the way, be comfortable with getting stopped out of every trade, because I promise you will get stopped out of every trade in a big enough picture of trades. But then you just got to let the trade play out. You know, don't get in your head. Don't have bad trading psychology. The number one way that we can battle bad trading psychology is by having good game planning. Because we're all human beings, we're not robots, we're going to feel emotions. The key is to not let emotions affect your decision-making process. When you got in this trade, you had a game plan. Don't deviate from it. It doesn't matter that the second candle looked wacky for a little while and it looked like the trade was going to fail. Let the trade fail. You should always, you know, and again, this is more theoretical, but in theory at least, you should always feel 100% comfortable with every trade you're in failing. And if you don't feel that way, you really shouldn't be in the trade. Because you have a certain degree of risk on based on a certain amount of risk, reward, and probability of the trade. You understand some are going to work and some are going to fail, and it just kind of is what it is. You already put your risk on. Doesn't matter that this thing looked bad for a moment. Maybe the trade was going to fail, okay? And the trade fails. but it didn't. The relative strength held up, it tailed back up, it worked in your favor. Stick with the game plan that you established for yourself. Cover your risk where you're supposed to cover your risk. Don't sell extra stock if you didn't game plan to sell extra stock. And then the final thing I probably take issue with more than anything is actually your trailing stop. I don't understand how you got stopped out at 12:15. I don't understand how this is stopping you out. You're not trailing off of a pivot. You're not trailing with ADMA catch up. You're not trailing with new highs. I have 3 rules for trailing. I'm assuming that you've seen the 3 rules for trailing in my game planning class that I have. I would definitely reference back to that if you haven't. That a stop in that spot doesn't violate one of the 3 rules. It violates all 3 rules. I hate that you got stopped out in that spot. Where you should be getting stopped out is here. And honestly, you probably should be getting stopped out here at an even lower price than where you got stopped out, which means that you probably should have made even less than you made on the trade. But at least you'd be trading it correctly, and it's going to make you more money in the long run. And that's how we want to think. So, appreciate you bringing it up, Dave. I hope it helps. From Mike Reed. I've been trying to work on core positions, and with that, I've got multiple trades going on at once. Since I'm a new trader, multiple positions is new to me. Assuming I'm taking adequate risk per position based on the overall analysis of each trade, reasonable risk reward per trade, covering 1-to-1 per position when entering, adding back. Do you have any rules regarding how much of your account a person should be risking at any one time? I'm not risking 50% or anything like that, but just wondering if you have had general rules for something like that. Sorry for the long question. No, I appreciate the question. I think it's a really good question. And it's definitely something I've thought about in the past, because sometimes my open risk I feel like gets a little silly. But I just kind of do it anyway because I don't have rules for it. So what I actually want, I want to have as many positions on as possible where I've got my fully covered risk. I want to have 1,000 positions on where the risk is fully covered all at once. And what that means is if I've got 1,000 positions and they're all in win-win situations, and then they all end up, trailing in all of them, let's just say, and they all end up stopping me out, I'm going to give back a lot of P&L. And especially if it's swing trading, we have mark-to-market accounting, right? So, at the end of the day, your account, your trading account, is going to show you the realized and unrealized losses. So, I don't know, I'm just going to make up random numbers. I'm trying to make up some numbers that are large, but maybe realistic, but maybe a little exaggerated a little bit to get the point across. Let's just say that you had, I don't know, a $50,000 account, and you're putting these trades on, and you get your risk covered in all of them, and you got a lot of trades that are open, and now that $50,000 account's $150,000, and you got $100,000 in open P&L. You're trailing, and the day closes, and now your account says you got 150 grand in there, and your trailing stops though for those trades based on the daily chart might mean that if you get stopped out of everything, that you'd only make $75,000. You're in a win-win across the board. You're not only going to be break even, you're going to make money net across all of these trades if every single one of them pulls back the next day and stops you out. And maybe that's what happens. In that case, you literally just gave back 50% of your account. Let's say the very next day, the market crashes, all these positions go down, you get stopped out of everything. You started with $50,000. With open P&L, you're at $150,000. You get stopped out of everything. You're at $75,000. You gave back, in this case, 50% of the account. Net, you still started at 50 and ended at 75. I'm going to say that's not bad. But the question I feel like that you're trying to ask, and that's why I'm making this point with like, obviously really large movement, like probably unrealistic movement of an account, is to kind of get the point across of at least what I do. If what I just described was my situation, I'd be willing to give back half of my account. I would have open risk based on money made of half of my account. I'll do that. And the idea here is, you've built into these positions, and not like my scenario where you did them all at one time, but like, you could be building into swing positions, especially like if you had an uptrending market like the market in 2019, where we just kept, moving higher and higher and higher and higher and higher, and there were no pullbacks. You could have been building into a new swing position at the end of almost every day, having your risk covered and say, I'm going to hold the position for reward maximization. The market only goes up. It just keeps grinding higher every single day. I think it was 2019, right, that the biggest pullback we had the entire year, from highs to lows was 1.5%, as opposed to now where that's like happens every 10 minutes. I'm just going to keep trimming and trailing on the way up and having those positions. And if the open risk somehow became half of my account, I'm going to say to myself, all right, well, I'm still in a win-win situation from where I started. And for me, where I'm greediest, I don't want to be greedy when positions are going against me. I want to be greedy when positions are going with me. So the way that I am, I would give back half of my account. But why am I willing to give back half of my account? Granted, again, it's all open P&L. Because I think that $150,000 that the account is now at could be $500,000 if these positions continue to move with me. And that's really how I think. So I don't have, general rules for that, provided that I'm in a win-win situation, which is where you want to be on swing trades, or you probably shouldn't really be swinging them to begin with, unless you're doing it small and you're building in, which we talk about sometimes. But if you're doing it with any size, if you're keeping the positions overnight, you probably want to be win-win before you even keep the position overnight. So, yeah, I mean that's how I think about it. I just become extremely greedy when I'm making money. Hope that helps. And it was a really good question, and I don't think anyone's really ever asked a question like that before, so I appreciate it. Whew. From Rex. I traded Apple a couple times today. Yeah, you had that one great call out. This morning, the market selling off, but Apple was still holding. Yeah, I remember when I was really worried about the IWM in the market, I was looking at Apple and looking at it like a ray of sunshine, and Amazon like it was a ray of sunshine with the way they were holding in. But let me read your question. So the market's selling off. Apple's holding above the opening low. I longed at 955. I really like that trade. But I couldn't cover my risk. No problem. I tried again at 1005. 1005? Okay, I don't love that tail. This is the one I like. When it down ticked back to 143. This one seems like it's a little bit too myopic. Risking low, that candle got stopped out again. I finally tried at 1010. It turns out working. I feel like I always get into the trade too early and get stopped out, or I'm not using the right stop. Should I be more patient since Apple is not bouncing with the market at 10 a.m.? So I really like your first trade. I don't really like your second trade, and I really like your last trade. I like the first trade for the exact reasons that you described. The ADMA catches up. You get this doji here. This is where you want to see the market going. Obviously, the IWM is not helping you with that trade, but the Qs are. So I like it. Yeah, I like it, but wasn't enough to cover your risk, and you get pushed out. But wait, I'm trying to figure out, the 1005 candle. So you get stopped out at this low, and then you rebuy. I don't like this as a signal, this candle. I don't think that the tail is big enough. I don't think it's signaling a pivot. If anything, I think that this candle is signaling failure. I think you're overreading this tail to put that trade on. This stock should not have broken this low. It broke that low. You got to take a step back. This candle did not close well enough as a continuation hammer or anything in the equilibrium, I think, to be going long here. This one is now different. See, this one is the first one you took was a 5-minute correction doji, a like that trade a lot, holding the opening low. This one broke the opening low, but it did it via a tail. So that means it's more of a shakeout situation than anything. And off of shakeout situations, sometimes it actually makes stocks go up even easier. And it's doing it off of a 15-minute correction. And you got a really good-looking confirmation candle with it. Though not, I mean, you don't have the volume confirmation, but I think that the candle shape off the 15 I like a lot. This one, I just think you're overreading it. It just broke that previous low. It's not a full correction. Fine, it's holding opening lows, but if opening lows were what you thought was important, then you shouldn't have used the stop loss of the 955 low on the first trade. You should have used the opening low as a stop loss on the first trade if that's what you really cared about. But I actually prefer the stop that you used. So that would be my thought process. I think the first one's a good trade that the market causes to fail because we just talked about how difficult today was. The second trade, I think you forced it. I don't like it. And the third trade, you called it out in real time, and I was telling you that I loved it. And I still love it. And it gave a great bounce. And if the market wasn't trash, this could have been a phenomenal trade. But the market was trash. So I hope that helps. From Chi, as a beginner trader, how to identify a mistake if you do not know that you made a mistake? Oh, that's a great question. How to identify a mistake if you're such a new trader that you don't even know it's a mistake? I love it. I'm going to think about that one for a second. Ask somebody. Did I ask somebody who's been trading longer? Did I make a mistake? And I'm joking, but I'm also kind of half serious. Be part of a team where you can ask those types of questions. That would honestly be my first thought process. And that's why I think for a beginner trader, actually, it's so important to be part of a team because you don't know anything when you're brand new. I like to use the analogy of if you took an alien and brought them to America and then showed them how to cook on a stove. And you walk out of the room and they don't know what a stove is, they've never seen it before, and they go up and they put their hand on the frying pan and they burn their hand and they go, oh wow, it's hot, I'm not going to do that anymore. That's how we're supposed to learn things. But as a new trader, those same things that are ingrained in us from nature, learning that the frying pan is hot, can actually be a real detriment when you're a new trader if you don't have anybody to work with, because you can do all the right things. You do the right thing on a trade and you lose money. Let's say it's your first day ever trading. You do the right thing and you lose money. You do the wrong thing and you make money. Well, what did you just learn? You learned that the wrong thing is the right thing and the right thing is the wrong thing. You're setting yourself up for failure. So first thing I would say is to get with a team. Second thing I would say is that learning in this business is hard. And the only way that you can really understand if things are right or wrong is based on larger pools of data. And if you've never placed a trade before and you don't have anyone that you're working with, you're kind of doing things almost willy-nilly in the beginning. Just make sure you're doing it consistent, because you're just going to have to take enough losses over time to have a big enough pool of data to be able to analyze it, to then recognize if it's actually a mistake or not. Because otherwise you're not going to be able to know. And again, the way to save yourself on some of the tuition to the market is by paying potentially tuition to a team, by getting involved in a team. So there you go. From Sebastian, today names like Exxon and Amazon had momentum moves at the open, but then broke their opening lows. These names ended up rallying again. And do you think it was good to try to buy dips on them, or after they broke the opening low, we could have taken it off our radar? I was stalking this Amazon so hard today. I thought this was holding in great. I called out a long versus this hammer. I remember being disappointed at 10.10 that it wasn't bouncing better when the market was bouncing and finally went a little bit, enough to get your risk coverage if you took a trade. But for me, once these lows broke, like I was saying, earlier when I was talking about the market, once these lows broke, it was done for me. I can look back in hindsight and say, wow, the market closed on highs and Amazon closed at highs. I should have been, more aggressive with getting back involved, but that's not accurate. I'm done with them at that point when they broke those, when they broke this pivot low, which was it also the opening low? Did it hold the opening low? It broke the opening low by 2 cents. I wasn't done with it at that point. Breaks the opening low by 2 cents with a tail when there's still extension. Fine. I'm still sticking with this. It's here that I'm done. This negative Maribozu in the break of lows when it shouldn't be doing it, and it's getting below all the moving averages. Forget it. And ExxonMobil breaking the opening low, I wouldn't be done with it either because it's doing it off of extension. And what do we know? When the ADMA hasn't caught up to those lows, you can get chicken out of positions and new highs can still come in. So Exxon actually is one you could have stuck with all day today to the long side that it ended up working. I don't think you need to be done with Exxon when that opening low breaks. From Mike L, I don't trade fundamentals, only charts. Aren't you the Bitcoin bear? And I know Nvidia is not Intel, but Nvidia EPS was $1.13 in 2020, $1.73 in 2021. And the last 4 quarters, it was 27 cents, 26 cents, 64 cents, $1.18 for a total of $2.35 for 12-month trailing. And the stock is at 198, which is 84 times trailing earnings. It makes no sense. Check out the insiders, all sellers lately. Yeah, I mean, we did see a lot of insider selling from high multiple names in the bubble when it occurred. I'm not, a major fundamental guy either, though I do incorporate fundamentals in my trading, but I incorporate more of what I call qualitative fundamentals, which is more about the story in conjunction with the technicals than the actual traditional fundamentals, which doesn't mean to say I don't pay attention to traditional fundamentals as well. That's why I like having people on the team actually who are really good at them. I mean, the flip side of the argument that you could say is that fundamental people, so that Amazon was, off of its, trailing PE, and I actually prefer to look at forward PE from the fundamentals that I do, more than trailing. But this entire run, Amazon was never at an appropriate price based on those those types of traditional fundamentals. Is the counter argument? When you're talking about a high price to earnings ratio, whether it's trailing or forward, and again I prefer looking at forward multiples a little bit more. When you're talking about a high ratio there, the idea is that the company can build into that over time. And the other counter argument would be, well, Nvidia can be enabled to trade at this really high multiple because they're the ones that have the technology that's powering all leading tech, and they're going to build into that multiple over time. The earnings is going to catch up to the price. If it comes down and contracts, then it's the opposite. It's price catching up to earnings. What we've seen over the course of the last year is a lot of that, right? We've seen a lot of multiple contraction. So I don't know if that's what the PE is at 98. What was the PE at 190? So that's kind of the counter argument, just to kind of come in on that. Not that I'm a true fundamentalist. And I know even here on our team, there's been a lot of chatter over the course of the last several years. I'm looking at Nvidia and AMD versus Intel. Intel's cheap, but Intel's probably cheap for a reason. They can't produce the stuff that Nvidia and AMD can produce, from my understanding at least, because I'm not a chip expert either. Okay. The Bitcoin bear in hibernation waiting to reappear. Next from Bandit. Can you talk a little bit about how you view a failed inside and up? An example I'll give you is Labo. Labo today at 10.10. I didn't trade it. It's only an example. Okay. I know if I would have traded it perfectly, I would have been able to cover my risk, but it rolled over and failed. Do you view it the same way as you would a Maribozu that gets completely engulfed. I do not. I guess just asking if you view it as significant or just a setup that failed, more as a setup that failed. Would it have been a signal to move to the short side, or would you prefer to use the 955 pivot low as the short entry? Sure. So for me, it's just a trade that failed. Those Maribozus actually signal, like really signal something as far as the market being innocent or guilty for the time frame that I'm looking at, and they mean a lot more to me. Inside bars, we also want to remember that many of them are useless and unimportant. We want to use inside candles specifically as an execution setup for when we like other things, specifically for like momentum and trend. So I love that like inside 5 and up trend continuation setup that I talk about. Can you use this inside 5 as a trade? Yeah, fine. Pull back into the gap fill. It's trying to find some support. It makes this low. You want this inside 5 to break up. That kind of begins the beginning of like a gap fill, small time frame reversal to work its way back up to highs. I would also argue that this thing sold off so hard that the probability of making new highs is very low, so I don't love it. But we definitely don't want to be taking like inside bars in this period of time are meaningless. Midday consolidation inside candles on a 5-minute chart or even a 15-minute chart, useless. If you take every single inside candle that you find in the market and you trade them all, I promise that you will lose money in the long run. So for me, it's more of a failed setup. You're looking for this stock to bounce back off of a pullback and go from like small time frame lower highs and lower lows, but then get in touch with the big picture of the market and the big picture of XBI. And reverse back up. That's an okay trade, and you're using this as an execution for the continuation for it. I'm fine with that in this situation. When it fails, it's just okay. I had a trade there. It tried to go. Hopefully, you got your risk covered, and the market for this thing is just going to be weak. And at that point, then I'm done. Am I going to use that as a short entry because it failed? No. One spot that I disagree with Pat that I've heard him say a couple times, and again, maybe he's right and I'm wrong, or maybe his thought process is right for him and my thought process is right for me. That's probably most accurate. You can have two successful traders and not necessarily have them agree on everything. But I know Pat has spoken about, like, in theory, a failed long is a short. I don't necessarily agree with that. I think that sometimes a failed long is a no trade and not necessarily a short, but also not a long again. In other situations, a failed long can be a short. Maybe in this situation, a failed long is a short a little bit later, like with this setup. I think it's just too hard. And I know he's talking in theory, so maybe like the ideal perfect trader could have recognized that this also then would become a short. I haven't met that guy yet. So I definitely don't like the failed long here as a short, though, and I don't view it as any more significant than just a failed trade. What do you think about triple M at 943, entry price 112.86? No, what time? 943, 112.86. Above these lows? It's above them. Inside 5. It looks like you're trying to cheat on the break of an inside 5 to the upside. What's the daily chart look like? So daily chart's extended. So maybe you're looking like for an RDR on a third day down. What's yesterday's low? 112.78. Okay. So you are breaking. Did you break yesterday's low? Did we break yesterday's low? No. Or did we? What did I just say? 112.78? 112.75. And this low is 112.77. So it's not going to be an RDR because we didn't break that previous low. You're cheating on an inside 5 break. I don't hate it. I do it sometimes. But you're cheating. So sometimes when you cheat on a trade and you take risk on when the signal never fully came, you lose money because of it. Other times it works and you have an even better risk reward. So I do that sometimes. You just want to recognize that what you are doing in this trade is cheating. This is an inside 5 and up. That's what I see your call out as here. And you didn't wait for it to break up. So really, you should be waiting for the thing to get above 113.19 and executing there versus that low. You went early. And, or did you? Wait, hold on. You did it in this candle. So I guess you were just going long off this low. Yeah, I guess you were just going, never mind. You didn't cheat on the inside. The inside bar didn't finish forming yet. You were just going long off this candle. It's okay. Gap fill, a little bit of a doji. I'd want a bigger doji. And I also would have really liked it if that was occurring below the previous day's low. Because then you could be also participating in a trade that becomes an RDR back to the previous day's low. So, what do I think about it? I don't think much of it. I don't love it. I don't think it's the end of the world, but it's probably not something I would have taken. Do you have any educational videos that cover rules and details for swing trading? I don't. I don't, because the content that I would have for it, I don't think is long enough really for one. I guess I could make like a shorter YouTube video. I definitely don't have a training program class for it. But it's pretty simple. Swing positions from win-win situation. Try to have intraday risk for daily chart reward. Keep the positions when the 1%. You know what? I should do. I'm gonna make a note about this. I can do a little video about it. Make sure you have at least a 1% profit cushion to keep it overnight. Once you agree to trail it on the daily chart. If it ever gaps past your stop loss, you utilize the 15-minute rule where you don't get out for 15 minutes. I'm gonna make note of that. Good idea, Pam. If anybody else has ideas for little YouTube videos that I can make, let me know. I'm happy to do it. I'm trying to build out and create more content for that YouTube channel. I just run out of ideas. I don't know, Ricky. All right, from Anthony here, and then I'm gonna have this be the last one because it's 10:20 and I'm losing my voice. Hey Dio, this is my first month trading, and you're right, this would be impossible to do without a great team to lean on for knowledge. I appreciate all the knowledge you share pre and post, and also in the VTF during the day with Pat. It's tough taking some L's to learn, but I feel like with your help and my determination, this isn't even a question, this is just a shout out. Great. But I feel like with your help and my determination, I will get there, and the L's will be well worth it. I love it. Trading is really hard when you first start. I always want to be really honest about that. I've been in this business for a long time. If I'm talking about somebody who's at an entry level who has never really traded before, I can probably count on one hand how many people I've seen who have never traded before who are positive in their first month trading. Even with the support of a really good team, it's just so much to learn. It's very, very difficult. Most entry-level traders who are first getting started in this business do not make money their first 3 months. So the most important thing when you're starting and when you're learning, if you haven't done this professionally before or you haven't done it, try to do it for a living before, when you're first getting started, manage your risk. You're most likely going to lose money when you first start. So make sure that it's not a number that you can't come back from. Know how much you're going to lose on any trade that you're getting in. Know how much that you could lose on a full day, a bad day where every trade fails. Make sure those numbers are not going to be a spot that's detrimental to you when you're going through that learning process. And then when you assuming things go well, hit that point of profitability, you might have a little digging to do to kind of get out of that little bit of a learning curve of a hole that you kind of put yourself in. But it's a small hole and it's a short dig. And you're not putting yourself in a spot that you can't get out of. So that is that would be my advice. So welcome to the team. All right, everybody. On that note, we'll wrap it up. Good meeting for a tough day. Intel's still making lows. See you all tomorrow morning.